Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates. 10-year note yields still going lower. Actually, the third consecutive trading day where we settled below 220. You got to go back to June last time we did something like that. And if you look at what happened in June, yields were trading on their lows just ahead of the ECB forum and an interview from Janet Yellen from London, which shot yields higher pretty quickly after that. So right now we are kind of hovering on the lows, on the recent lows, waiting for something to happen. What could that waiting be? Well, we've got a lot of things happening this week. And if we look at implied volatility, market volatility didn't go down today, which it's almost like it went up, because typically we see Treasury vol been trending lower as equities kind of been hanging near the highs and as gold has been hanging, kind of in the midpoint. But a lot of that's been changing. Gold's been rallying. We see stocks sell off, and now we see bonds bidding. So there's a volatility is kind of thrown off here. We should be seeing it bid. By the fact that it's not going down, we'll kind of mark that as a sort of bid, and we'll have to wait and see how the rest of the week pans out, because that is where the event is, the Jackson Hole Symposium. We're going to hear from Janet Yellen. We're going to hear from Mario Draghi on Friday. Those are the two highlighted speakers. However, we will hear from a lot of other people, from a lot of other central banks, and that's going to keep the market on its toes. Right now, the key focus is going to be Janet Yellen's outlook on rates and on balance sheet. And if you look at the European Central Bank President, Mario Draghi, he will be looking more about stimulus and the removal of stimulus, and you might want to throw in a dash of Brexit into that. How is that going to transpire, and how is it going to affect the two central banks, whether it be the Bank of England and the European Central Bank? So there's a lot of things going on right now in the world. We should be seeing more of a flight to quality bid, which we are in Treasuries. We should be seeing more volatility, which we're not in Treasuries. However, when it comes to Friday and Saturday this week, we'll probably get some resolution moving forward. This has been Todd Colvin coming to you from the floor of the CME Group.